Welcome back to Borderless Info, where information is very important. There's no border to information, especially when it comes to money, when it comes to building generational wealth, ownership. If, for example, you don't think you have enough money, or you have question about your credit, and you said, for example, I don't even know where to start, this episode is actually for you. Today, we're breaking down the home buying process with someone who lives, breathes mortgage, especially the first time home buyers. No fluff, no confusion, no bank talk, just real information. Joining us today, Mr. Wisno Joe, my good friend. He is a mortgage loan advisor with many years of experience, and this is someone who can help you turn one day to a closing day. Ladies and gentlemen, I thank you so much for another Border Lesson 4 show. Today we have with us Jerome Rousseau. Jerome, how are you?
Hey, Luther, thank you for having me. I am wonderful. It's fine. It's the holidays. I'm in a good mood. It's always a good time to talk about real estate.
That's very good. That's very good. So when I first met you, before we became friends, I always call you Joram. But in Haitian culture, we call people by the first name. But your
Yes,
first name is
Uzno.
Wuzno. Exactly,
Yes, pretty
exactly,
much everybody call me Jerome. It's easier to
exactly,
pronounce.
exactly, exactly. Now, what we're going to do is giving you a chance to present yourself just a little bit. Don't have to go too deep. Don't go to the degrees. Don't go to the years of experience. But just
Yeah,
present yourself.
yeah. Thank you so much. Yes. Like I said, my name is Wusuno Jerome. I'm a mortgage lender, and I go by Lender Pepla. I'm the people's lender. I'm in the Haitian community, the Haitian American community. Pretty much my goal is to make homeownership seamless, right? Make it affordable and talk to you, help people get into homes. I want more people in our community to be a homeowner. I want us to start building wealth to real estate. Luther is a client of mine, a friend of mine. I've done two transactions for him in the last 2 years. So, like I said, I'm very excited to be here, and it's a pleasure to be here to talk about real estate.
That's good. That's good. So let's start here. Let's start about. I call you a mortgage loan advisor, and that's who you are. So what do you do?
Yeah, pretty much. I'll refer to myself. I'm not just a mortgage loan officer. I'm an advisor because I advise people. I'm pretty much advising people when it comes to real estate, right? Not just about just mortgage yourself, right? If the location, your investment, what you're buying, the transaction, the deal you're getting, the rate. I advise people from the beginning to the end. So I'm just not about giving the loan, kind of help you out about the loan, the benefits, some of the tax incentive is there for the loan part that you qualify for. What are the some program assistance that can help you? Basically, to advise you to make the process seamless, also make it more affordable for you.
Yeah. So
So it's
so
not
so
just transactional, it's just me helping you from application to closing
I see. I see.
and beyond that.
Okay, that's good. So I always ask, what is the difference between going to a bank and going to a mortgage loan advisor?
Okay, so going to a bank, right? If you're looking at the bank is like the bank get customers, right? So they have people that you and I have a bank we associated with because we have to pay our bills to a bank account, right? So they have the customer, they have other people applying. So think about it. Like for example, let me use a bank that I use, Chase. Chase can get roughly in the states in the Georgia state, Chase can get maybe 1,000 application per day. So they get a bunch of application per day. So they, they don't really need the business. They don't need your business to make money because the bank makes money as so many ways. But they love to have your business. If they have it, they're gonna do your business. So when you go to a bank, what you're gonna realize is that the bank's gonna have what we call overlays, right? Because the banks are using my money and your money, right? Our money. A lot of times they use our money. We call it the deposit money to loan out. So because they are using other people's money and they are very scrutinized by the government, a lot of time they look into risk. So they are more risk, they take less of a risk. The bank doesn't like to deal with people with low credit score or that could be high risk because the banks would love to have a client that has 20% down, 700 credit score. If you have a 700 credit score, you could have 20% down. A bank would love to do your mortgage. However, for the average first-time home buyers, people down on 600 credit score, they don't have the 20% down. Your best bet to go to an independent mortgage company.
Yeah, thank you. So today we focus a little bit more on the first time home buyer.
Hmm.
Those are the people that we focus on. Now, what is the biggest misconception about first time home buyer? That, I mean, that in your experience. But
Okay, so
with that question, I want you to look at the fact that we have a situation where the financial market is a little bit down. I mean, if it's not down by numbers, but psychologically, it's
yeah,
down.
yeah, yeah.
People don't
Of
feel
course, of course, of
that
course.
people things are good. What is the biggest misconception?
Yeah, so the biggest misconception I have, right, for people first time home buyers, right, they need a perfect credit score or they need 20% down. Believe it or not, you can get an FHA mortgage as low as a 500 or 580. I personally like to tell people if you have a 620 credit score, you would have more option. But 580 to 600, you can get in a home. The misconception people say, well, I need to have tons of money. Well, you don't. If you don't have a lot of, if you don't make a lot of money, you have a decent credit score. There are grant program on the county side. There are bonds program on the state side. So they are what we call down payment assistance. You can get a bonds program. So instead of Georgia, we have Georgia Drip. You have different county has different county grants. Also, you can finance a down payment. So the biggest misconception is that people think you need a perfect credit score to buy a home. You need to have 20% down, which you don't, and also that they don't think that they have money out there, especially if you're buying a house less than $350,000 or under. There are programs out there that can help you with the down payment, that can cover the entire down payment with it. So to answer the second part of your question, as far as the market, yes, we are seeing a slowdown in the real estate market. A lot of it has to do with how the consumer feel, right? So there's something in the economy called consumer sentiment, right? How do people feel like going to 2026? How do you feel about it? Do you feel like your job is secure? Do you feel like you're gonna be in a pro? Do you feel like you're gonna make this money? So when people don't have the same sentiment, when they have this little doubt about the economy going forward, what we do as a consumer, because we are in a consumer-based economy, we tend to pull back. Oh, I don't know. I see a lot of people getting laid off. I don't think my job is fully secure right now. I'm not gonna make that big transaction to buy a house right now. Yes, they are slowed down right now. But for those of you that are in a field, like that's if you're in a medical field, you're a nurse, you were in a field that we call recession proof. Believe it or not, Luther, there's a lot of field out there that's recession proof. Whether the economy is bad, they need you to have a job. People are gonna get sick. Example, the medical field. So if you're in those field, you want to buy, it's the perfect time to buy because there are a lot more inventory in the market. There's a lot of homes sitting in the market right now, and there are less buyers. The less buyer that's in the market, the more homes, the less buyer, the more deals a seller willing to give you. So right now, you can buy a house without paying a dollar in your own pocket if you can afford the monthly payment.
I see. So let's say, for instance, you one of those people with that sentiment that you just described. When do you start talking to a someone like you?
As early as possible. Because you got to think about it. It's gonna get more competitive March, April, because the spring market, that's when it's the busiest market. Spring to summer is the busiest market. So we are approaching January. So now is a good time to talk to a mortgage loan advisor, mortgage lender to get pre-approved to see how much you qualify for. Then the next step is to go to a realtor and start up. So if you could start the process right now, you want to be able to get in a home no later than February. That's when you get the best deal. Because when it comes to March in April, the market tends to heat up a little bit because the spring market is the busiest market for the housing market, then you are going to compete with more buyers.
I
So
see.
now is a good time because you are right now everybody thinking about winter time and nobody's really thinking of buying. Sellers want to sell because they want to move on. Then you'll be in a position to get a better deal.
Correct, correct, correct. So I mentioned, I heard you mention qualification. Now, in terms of terms that I heard often, what is the real difference between pre-qualification and pre-approval?
So a pre-qualification is just when you apply. Let's say you give me your information. You tell me you send me your pay stub. You apply. I got your credit. And then I can say based on your information you give me, you qualify for this. So a pre-approval is when I have fully vetted your pay stub. I get a VOE, what they call a verification of employment. I fully verify your asset, and I run automated underwriting system we call DU or LP, or and I, in addition to that, send it to an underwriter to review it, have somebody physically look at it and to verify that information. So you are fully pre-approved, meaning that once you go under contract, there's gonna be less document requested of you. Okay, so a lot of the stuff you're gonna buy is gonna be less document, so you'll be able to close it at home. Whatever. So pre-approval, we just give the seller more confident that you are fully vetted buyer.
I see, I see. So I was preparing this show and I meant to ask you that question. So what is more? I mean, it may not be a real question, but I meant to ask you that question. What is the most important things between having money to buy or having credit?
Well, you gotta be able to have both, but you gotta have both because you're gonna need some money. However, if you have a stellar credit, a good credit, you may in this market you may not need enough funds because right now the way the whole U.S. economy work mostly on credit, right? So what does the credit has to do with anything, right? Credit is just simply is that it just simply determine what is your credit worthiness. Are you a good credit? Are you somebody who pay your debt on time? Not only pay, a lot of people, there's a lot of misconception out there, Luther, when people say, well, I paid my credit card, I don't owe on that collection. But now when I pull up your credit, you have a bunch of late. So we not only the underwriter or the lender is not only looking at for people who pays the bills, but the most importantly, you pay your bill on time. So the timing of it, pay your bill on time. A lot of people say, I pay my bill out of not a collection. Yeah, but you don't pay it on time, you pay late. So having good credit will enable you to if you qualify, if you make certain amount of money below it will enable you to get some down payment assistance. So in essence, you can buy a house with little to no money if you have the credit, because there are programs that can finance you the down payment and closing costs. There are programs that can give you that. There are grant out there, but all this program require a minimum credit score. So having a good credit can substitute for lacks of funds.
That's a fun, yeah. We know that people have a lot of debt, but those debt, the most unknown debt that I know, for at least for people like me, are student loans. How does student loan affect you from being qualified for a mortgage?
Yeah, student loans since the new administration came into power, they have changed the rules on the way we know. Not, they didn't change the rules. It just they make it a little difficult for people to qualify for what we call income-based repayment. So in a mortgage world, when you have student loan, and let's say you don't have a payment on your credit card, right? Like you have a student loan, you're not making any payment right now, it's in forbearance, right? And we use a rule called a 1% rule or 0.5% rule. So we use 1%, depends on the this loan program we use it, or 0.5%, depends on the loan program. So the 1%, let's say if you owe 1% of every $1,000 you owe. Let's say if you owe $100,000, we count $1,000 monthly payment. We're making a fictitious monthly payment attached to your student loan. So we are seeing that student loans is impacted a lot of clients nowadays, and it just reduce their buying power or makes them not qualified.
Mhm,
Well, I will advise everyone to do that as a student loan that wants to buy a home. See if you can qualify for IDR, which is an income driven repayment.
mhm,
If you qualify for a lower monthly payment, it's good. But if you can't qualify, whatever the monthly payment that's showing your credit report for a student loan, we're gonna use it towards your debt to income ratio.
I see.
So
I see.
yes, it has impacted a lot of people right now because we move away from a different program. The prior administration has a lower income-based repayment. The current administration using the regular income-based repayment. They're no longer using the COVID era income-based repayment. Therefore, the monthly payment has spiked up considered to the previous administration
Very good. Very
repayment
good.
plan.
Very good. Now, speaking of first-time buyers, what loan would you what type of loan are available to those people?
Well, the first time home buyer, we have all this loan. It depends if they're veteran, they can get VA. You don't need a first time home buyer to do that. You got FHA, you got conventional. The loan program is really dictates on your income to debt ratio. What is your credit score? What is your income to debt ratio? The reason why I go to that, a lot of people say, well, I want an FHA loan. And I tell people, based on your credit score, if FHA is not feasible because I look at your mortgage interest to determine, hey, based on your credit score, you could get a better rate. You might be able to get a better mortgage insurance using the conventional loan FHA loan. So that question, all these loans program that I mentioned are available to first time home buyer. It really depends your credit profile, the individual profile, which is the loan that's going to give you the lowest monthly payment, the lowest mortgage insurance payment, and which is gonna be easier to approve when we get to underwriting. That's the point, is because I don't want to set you up for failure. I got to put you on a loan program that's good, that I see is the best interest of you. But if you qualify for both, I can give you both options. I say, based on FHA, this is what you qualify for. Based on conventional, this is what you qualify for. And then I can educate you, and that ultimately it's gonna be you making the best decision. But I will advise you, if I were you, I will go based on this. If you only qualify for FHA, I say, well, based on your credit score, based on your income to debt ratio, based on your desired purchase price, this is the loan you qualify for. Some people don't have a lot of, some people have high credit scores, some have low debt to income ratio. They can qualify for 2 to 3 different loan programs. For those that qualify for more than one, I will present you the option. For those that only qualify for FHA because of the debt DTI and credit score, and this is the loan option you qualify for.
I know for a fact. I'm so sorry. I miss most of your meetings or most of your reaching out to the community where you have meetings with people. And now, how can people who are listening to us or looking at us find you?
Yeah, so going next week, I'm gonna update. I've shot a few videos the past week. I'm gonna do a lot. I'm gonna upload 2 to 3 videos a week. I'm at Jerome Your Lender, one word, Jerome Your Lender on Facebook, Jerome the Mortgage Lender on IG, Jerome Your Lender on TikTok. So I'm very active on social media, and I'll be very active. And then you can go to my page, some look at some of my video. I'm going back to basic again to refresh everyone. What is the basic of buying 101? Basically, 101 home buying tips. What do you need? How do I position yourself to qualify? The number one issue I see in our community that we serve, Luther, is that people, a lot of us are not fully prepared, right? They don't do their homework before. They make decision to buy a house based on a lot of emotion. Oh, I'm tired, my landlord secret's mine, I want to buy a house. Oh, I can't do this one, so I want to buy it. But did you prepare yourself? Have you ever pulled your credit yourself? Did you look at your credit score? Do you have an app that control your credit? Do you have an idea what is your credit score is? Number one, have you thought about eliminating some debt? Have you looking at your debt and your income? So there's a lot of things people don't. So my goal is to educate people to do your part before you apply. There's a lot of things you need to do. Get an idea where your credit score is there, what is the impact your credit score. Then speak to someone like me, a mortgage lender.
Absolutely, absolutely. Same thing with someone who's getting married. They they sometimes would want you to attend some sort of a class so that you learn about what's gonna happen and get
Yeah.
prepared for what's gonna happen. And I really appreciate that part. Now, I know that you are in Georgia. Do you serve other communities or the states?
Yes. Currently, right now, I serve Georgia, Florida, Alabama. These are the
Okay.
3 states I have: Georgia, Florida, Alabama. I'm working in New Jersey very soon, next year. But currently I'm at Georgia, Florida, Alabama. Anybody's, if you're in Georgia, Florida, you don't have to call me just for say I want to buy a house. Sometimes you want to get an idea, you want to get a consultation, get an idea where you at. Let's create a plan for you. Let's see when are you be when you're gonna be able to buy, what is the ideal time frame? Because it could be 6 months from now, it could be 3 months, could be a year. But it's you gotta start somewhere. We ought to start somewhere.
Okay. Now we touch on some of the misconception about getting a first time loan for buying a home. We now went through the pre-qualification process. Now you pre-qualified. What
Yes.
should someone never do? I mean, let me go back. You talk to someone like who's know about buying home. He look at your credit. He look at your income. He look at your situation financially. Now he had prepared some sort of a pre-qualification for you. Now you ready. What should one never do once you have reached that point?
Good, good. So the first thing you do, like when you speak to an independent mortgage lender or mortgage broker, when you get pre-approval, you go out shopping, right? Remember the information you give me prior to your qualification, your pre-approval is based on that information, based on your current asset, your current jobs, and all of that information. So what you don't want to do is to quit your job. You don't want to because you don't know if the lender use bonuses, overtime, a lot of stuff that if you change jobs, you may not be just transfer or to count against. Don't quit your job. Number two, do not open new credit card or open new debt. Do not buy no new car or new credit card, new debt because whatever is on your credit report is there for 120 days. They're gonna go based on the debt. If you go buy a new car, then it could prevent you to qualify for your home. So number one, don't quit your job. Most important. Number two, do not open new credit, like a credit card or buying a house. Number four, do not make large deposit. No social money, nothing like that. When you're that tends to be no large deposit. I want to say these four things. Don't ever quit your job. Okay, even the boss is tagging as you hold on to you close. Don't quit your job. Don't open no new debt or buy a new car. Don't co-sign no debt for anybody. Less than least, don't make no large deposits. Because even if you're under contract right now, before you go closing, a lender will ask you for information for a current bank statement. Sometimes they'll go back to see after you're under contract to see, what money comes in if you have any large deposits. So you want to avoid doing that, which is quit your jobs, open new debt, credit cards, or get a new car, co-sign debt for somebody, or make large deposits. These are the things that I absolutely will, definitely will prevent you from buying a home. We kill the deal. That's the word we like to use. We kill the deal.
Yeah. So we get this together, with no because we want people to get informed. Now, if at some point it appears that we trying to scare you from doing what is good for you, we only want you to be informed about what's going on. Now,
Yes,
have you ever
yes, definitely.
seen? Yeah, have you ever seen people in good financial position to buy a home, and then at the near the end of the process, and then thing get wrong?
Yeah, it happens all the time. It happens frequently, believe it or not. It tends to. And this decision are made is not because they're speaking to the professionals, the realtors, the lender. It could be they're speaking to a family friend or someone who's never bought a home or someone who bought a home in the last 20 years. People talking to the ear, telling them, no, that's not a good price, that's not good this, that's not good that. And these are individuals to currently not in the real estate market right now or bought a home 20, 30 years ago and discouraging the people, the current buyers to buy a home. Yeah, it happens. People we position to buy and one reason or the other, they just have cold feet and move on. And reason for that is that they don't have explanation. A lot of times it's people talking to their ear.
I see. So now we're talking about job. For example, someone who has side hustle, how do they integrate that type of income into the displaying of the fund that you have to buy the money to buy
The
the,
best
the home?
the best way to the only way we can count a side gig is if you've been doing it for 2 years and if you report an income on your Schedule C. You have to report it on your schedule C to the IRS. If you're making a side gig, it has to be reported. For us to qualify you for a mortgage, well, like when I say mortgage, I mean traditional mortgage like FHA, USDA, conventional, government agency mortgages. You have to report the income as a on a Schedule C to the IRS. It has to be a taxable income. You got to report it, and you have to report it. You have to have 2 years of it, history of it for us to count it.
Okay, so we look at the fact that you give some example of you don't acquire new credit, don't acquire this, don't accept large deposit. What other item that cause, for example, for application to get denied?
People don't lie to us, believe it or not. You could see example. I can flag something. For example, if someone is applying and they say they have kids and I ask them, well, do you have child support? And it comes to find, I say, no, I don't have child support. I don't have child support. I say, okay. To them, they're taking a fist down in a record. They don't have a they don't have a court order. It's not trustful. A lot of time we find out we go to the bank transaction, we see they sell money to XYZ every week, every 2 weeks, the same amount. And a lot of time the underwriter has to do it, that has to count that as a child support income, and thus the person not qualified because it becomes a bigger debt. Beside that, the best thing you want to do, you want to be truthful to your lender, and then let your lender know the best way to go about doing it. Just come off from like, hey, this is what I got, this is what I got, this is what I pay, this is what I pay. I don't know if I can qualify with it, this is what it is. So just be truthful and honest is the best way. Because once I have your file, it's submitted and I review the numbers, everything with you, everything look good based on information you give me, you confirm. Once it's the underwriting, I cannot go back change it. I cannot fix it. It's already is there. Like it's too late at that point. But prior to that, there's a lot of information we can do, discuss. Well, let me have the proof, how much is paid, this and that. Let me see what we got to do. We can report it.
I see. So you work with people all the time and on acquiring loan. You work with me. You work with many of my other friends. So let's say, for instance, we dealing with. I mean, we're trying to educate people using someone like you and knowing that you know what's going on in the mortgage world. So how can people spot someone who's a bad lender, for example?
But that's a good question. What I don't want to focus being a bad learner. I want to show what differentiates me from anybody out there. So with me, I'm all about honesty and transparency, and I'm always at your best interest. I'm available 6, 7 days a week. I could meet you at my office, late hours. I'm all about helping you. Okay, so and I'm here to look at your best interest. So a lot in our business, so many times people look at it as a percentage. Okay, this guy's gonna apply for this loan. I'm gonna make X amount of down from that loan. I just want to get this to close. But ideal is that are they finding the best deal for you? Are they giving you the best rate? Are they giving you the best program? Are they educating you? Say you should get more closing costs. Are they telling hey you should increase the sell, get more difference? Are they position you to position to get the loan? And that's what I do. Now, when I educate you, I'm with you, and then you're a client of mine. You can attest to this. I'm with you from the beginning up until the closing. Even after closing, you call me, I will answer. I'm besides your own interest, your own your personal interest. I don't look at you like a lot of some other people in my field. Hey, you're a transaction. You're just a number. I try to build a relationship. I try to build rapport with you because I look at you as someone that I'm doing business with, but that can refer me of the business. So I'm always at your best interest. I would tell you like it is. A lot of time in our community, we don't like to hear the truth. We don't like people telling how it is, but I will forever tell you like it is. And if you don't like the answer that I gave you based on the truth, my feelings, you want to get somebody else to change your business, that's up to you. But I'm not gonna lie. I'm gonna tell you like it is because at the end of the day, I want to go home. I want to go sleep with a clear conscience. Every day I wake up, I want to have a clear conscience. Now, I did the best I could for Luther. I did the best up to my ability. I'm not going to kind of say, hey, I made extra money. I did this. I did this, Luther. I'm going to make extra money. No, I'm going to give Luther the best deal available to my ability. And that's what I do. That's what separates me from any lender. I'm just going to look out for you. I'm going to be an advocate for you.
Absolutely. I work with you, Uzno. You're the guy who will come to us, look at what we have. You would even go beyond office hours to work with us to generate paperwork. I mean, then once it's time for the closing, you're gonna be the one who's gonna be at the office first. Now, in your own word, please tell us what specifically, besides what I know about you, what specifically distinguish you from these other people.
Let me tell you this, right? I'm just going based on Haitian, right? Language barrier is number one killer. You remember how many times I had a call yesterday, the other day from a realtor. He's seeking a Creole speaking closing attorney in Georgia. I'm like, okay, well, I'm a lender in Georgia. I speak Creole. Well, you got to go through this. Why don't you use a Haitian speaking Creole? That way, because obviously, because one thing that realtor, he's a nice guy, but maybe he's still relatively new in business. I was like, because I feel like telling him, I feel like telling him, do you understand that the whenever the closing attorney you bring in, the closing attorney works for the lender. They tell you they after closing. How many times have they told you that, hey, I'm here representing the lender, I'm not representing you? I'm like, okay, but if that's your concern, you ought to speak to a Haitian speaking lender because the attorney that you're gonna go represent me and my company that's funding the loan. Because we the one that's funding them. We don't not gonna tell them to cut out the check. So the language barrier is number one. Is that number two? A lot of time in our community, I'm speaking in that community. There's like a mistrusted on that. I'm a trustworthy guy. I'm here in the community. I mean, I make myself available. I'm gonna meet up. I'm gonna meet up with you face to face. I schedule time to meet you because a lot of time people want to see. If you're in Georgia, you want to see me. I'm accessible. I'm telling you, I'm accessible. You go a lot of events, a lot of person in the community. People know me. I'm accessible, and I have nowhere to go. So I'm building. And thirdly, this is more like my God-given purpose in life. So this is more of a purpose for me. It's not a job. It's a purpose for me. So when it becomes purposeful, I'm gonna do whatever it takes to get you to the closing table. So a lot of people may look at it as a career, as a job. Me, this is a purpose. This is like sort of my ministry to get people to the closing table.
Absolutely, John. I see that you didn't add that part throughout of a buying process. You're going to stay always. But there's, I don't remember any time. I think we worked at least twice together on the
Yeah, twice. Yeah,
on
we
that.
did two transactions together in two
Correct,
years.
correct. But at any point, Wusno is going to be negative about the outcome every time, every single time.
Because you
It's not
gotta
gonna.
find a way to get it done. With me, I would explore all options
Yeah,
before because you gotta find a way because I want to get it done. And when there's a will, there's a way.
and,
I tell people all the time, I'm gonna do
and,
my part, just do your part.
exactly. And what I like about you, Wusno, is your teamwork. If you're not gonna be there, you always have a bunch of other people ready to assist us, and that's the type of person we're dealing with here. And I'm grateful. I'm telling you that in front of the world that I'm
Thank you.
grateful
Thank you.
for having met you.
Thank you
Now,
so much. Thank you so much. I cannot do it all by myself. Like you say, you did very good by referring people to me. I can only help as many as other people refer me. I'm only one person. I have a wife, I have kids. So the more clients that refer me to more clients, the more I can help.
that's very good. We really at almost the closing of this episode, Joam. Allow me to call you John because it's easier for me. I'm
Yes.
so sorry about that. Now, we're talking about the closing of the episode, but we're also talking about now the closing of the mortgage. Now, tell us, what does mortgage ready mean?
Okay, so mortgage rating means that when you pass all the phases, right? The
Mhm.
phases, the application, the pre-approval, the underwriting. The underwriting part has two stuff, right? There is there's contingency and there's a final approval. So when the underwriter conditionally approve all along, meaning that you passed most of the basic stuff. Now we just need to verify more information or waiting for title, taxes, insurance, all this extra stuff that is beyond me and your control. We're just gonna wait title company and the courthouse to give it to us. So once they get all that, then they clear the file to close. So the clear to close is your final approval. At that point, you are mortgage ready. So you basically ready to close and to start paying your mortgage. Yeah. So when you after that, just we sent your package. We give you what we call a CD, which is a closing disclosure, has all your mortgage, your monthly payment, your escrow with your taxes and insurance, your interest rate, how much the rate must cost you, and all the itemized details as far as your closing costs, your attorney fee, your lender fee, your title fees, and your cash to close, how much money you need to bring to the closing table to closing your loan. So this is the final. This is what we call your mortgage ready. It means that you've done all that. You've done all the steps to qualify for a mortgage. Now you're mortgage ready.
Absolutely, absolutely. Now, we from the beginning of this episode, we were talking about the type of psychological instability that we've seen in terms of people's perception of the financial health of the nation or the nation economy. Now, people must feel somehow discouraged about the buying. I mean, buying anything for that matter. But what advice would you give people who feel discouraged right now?
Well, my strong advice is that the question out there, everybody has a unique position, right? Do not let fear of the current politic economy fear you from buying a home. The question you got to ask yourself, are you ready? Can you afford the monthly payment? Are you ready? Do you see yourself living in that home for more than 5 years? Do you see your family, is this something you're going to enjoy? Can you afford the monthly payment? Do you have 3 to 6 months reserve? It's all about your unique financial situation. Now, if you can afford the monthly payment, you can buy now. I truly believe the next 30 to 60 days, 90 days is going to be the best time to buy in the last 3 to 5 years. The interest rate is projecting down. There are more inventory in the market than way before.
Mhm.
There are less buyers in the market way before. So everybody trying to make a deal. You can buy. I had a client who closed last month on a house that was priced for 450,
Mhm.
and they bought the house for 400. It was for 450. $50,000 equity. So the minute the client closing the home, he walks in with $50,000 equity. So basically $50,000 profit. So these are the kind of deal that's out there. You can get 60, 40, 50,000 equity, and you can get that. In addition, the seller did pay him $11,000 closing costs. So the seller almost paid all his closing costs. He only paid the down payment on his pocket. Yet he's walking with $50,000 of equity.
That's very
That's an
good.
excellent deal. So let's say another 5 years. Let's say the house worth 100K. He can sell us in 5 years and make $100,000
That's incredible, man. That's
in
incredible.
5 years.
That's
So
incredible.
that's the power of it. So that's if you can afford the monthly payment, you're comfortable with it. Now is the best time to start preparing yourself to buy it in the next 90 days. You're gonna be some great, great deals in the real estate market right now.
Now, I do not know what I'm going to say is realistic, but even if you don't feel you 100% sure that you can afford it, would you encourage people to take a chance?
Yeah, I would do it. I would
Okay.
do, especially if there's growth in the home. If the house has a finished basement, you can potentially do Airbnb or furnish it VRBO. Especially if you have with extra space, you think you can get additional income from to make it affordable. Why not? If you buy a house with a finished basement, you can Airbnb it. Depends where you can Airbnb it. Maybe an additional 1,000 to 1,200 or 1,500 dollars a month with Airbnb on it. That can help with the affordability. It depends what you're working with.
Absolutely. Now, you work with a lot of people. That's probably the last question we ask you. Um, People obviously need to ask a lot of questions when embarking in buying a home. What question people should ask, but they rarely ask?
Very good question. Very
That's it.
good question. Um, the believe it or not, people need to ask what is the buying power.
Correct.
Buying
Correct.
power means what is the most I can qualify for.
Hmm.
But
Hmm.
doesn't mean you should buy that much of a house. But always get an idea what is your buying power? What is the most you can qualify for?
That's very good.
The
Very
reason
good.
why you could see Just the most. That's that question people don't ask. I mean, if I were to buy a home in this market, I want to know what is my buying power, what is the most I can qualify. But doesn't mean I want to buy all the house, but just get an idea. Because if I can, if I can if I can buy 70, 60%, 80% of what I can qualify for, that should automatically tell you it's going to be affordable for you. I mean, if you can qualify for $450,000, yet you chose to buy a house of 370, 380, so you're buying something below your means. So how do you
That's good.
determine what's your buying power? Your debt to income ratio.
That's very good. That's very good. Now, this was the last question for you, Usno. Yeah, people who are listening to me at this time who just listen to Usno, if you feel there were information that you can use in terms of making the first step into buying your first mortgage, and if you possibly know people who need that type of information, feel free to go ahead and share this information with them.
Yes,
Uh,
yes. Please give me a
and
call. 908-764-0290. 908-764-0290. If I don't pick up, send me a text. Like I said, you don't have to be ready to buy a home right now, but at least get me an idea where you at. Let's create a plan. Let's work on your debt. Let's work on your credit. Let's see where you at. Let me help you position yourself to so you could be able to buy. It costs you nothing. It doesn't cost you a dollar to apply. It doesn't cost you a dollar to run your credit for me. It'll just cost you nothing. So it's a free service available to you. The only thing I hope that I would like to do for you, for me to earn your business, do business with you once I finish helping you with your credit. That's all I'm asking for.
and remember, I know Uzno. I know him personally. We worked with him twice. We were happy twice.
And you gotta steal the last deal, man. I still talk about it. My wife still talk about the house, man. That's my wife dream. I say, baby,
You
relax.
should
We're
stop
gonna
by
get
one day. You should stop
I
by.
will. My wife loved it. I said, baby, we're gonna she's like my God. That's my
You
wife
should
dream
stop by.
home.
You should
When I
stop by.
showed her pictures, that's her dream home. I said, baby, we're gonna work there. We're working there.
Thank you so much,
Thank you so
Uzno.
much. Have a good one. Thank you so for
Thank you
having
for
me.
taking the time to do this. You didn't have time to do it, but you'll do it anyway. We
Yes,
appreciate you. We
let's
love you.
keep doing what you're doing. Educate the people. That's what I'm here for. Thank you so much.
Thank you. Thank you. Take
Thank you.
care.
Bye
Bye
bye.
bye.